Hey everybody, Mike Banner here for the latest episode of 62 Who Knew. Very excited about today's episode, not just because we have a new national sponsor to announce, but this particular person, Mr. Chris Orestis, president of Retirement Genius. When I first looked at his bio and went, oh wow, guy thinks he's the retirement genius. And then I went to his website and looked at his following, his philosophies, the things he posts, tens of thousands of followers, and I went, I need to make an appointment with this guy. He's a retirement genius. And that's basically how the introduction started. But let me tell you a little bit about him. Chris is a nationally recognized expert in retirement, finance, and aging. He is perfect for 62 Who Knew. He is a former D.C. lobbyist, political operative, and senior issues advocate with 25 plus years of industry experience. We only bring the best to 62 Who Knew. One of the most quoted experts in the insurance, retirement, and financial service industry, he has appeared in the New York Times, Wall Street Journal, CNBC, AARP Magazine, USA Today, NBC News, Fox News, so he goes across the board, and numerous other media outlets, including being a guest expert on more than 100 radio, TV shows, and podcasts. Chris, thank you for being a sponsor, and thank you for being here for, I think, the first time of many.
Yeah. This is my first chance to come on, and I'm glad it won't be my last. Absolutely. Been looking forward to it, Michael.
Yeah, me too. And I've learned so much just in our conversations over the last 6 weeks of discussing you being here. And I appreciate that. I learned from so many other people. Let's get right into it because we're discussing today life settlements, which you brought up right before the show, correctly enough, suffers that little backwards, old, undeserving reputation of an older product. I spoke to many people in the last week. Guess who's coming on my show? And we're going to talk about life settlements, and we're going to do this, and life settlements is going to be a big part. And right away they were, well, is that like the viaticals of 20 years ago? And of course, I don't have your expertise. I said, no, it's nothing like that. But before we go into our questions and how this affects people's life, give us a little bit of that background and why, sort of like reverse mortgages, I'm always arguing about 20 years ago that this is not the reverse mortgage of today, of 20 years ago. Give us a little of that background and how you deal with getting that shadow away from us.
Yeah. And that's, it's a fair question to ask, and I'm glad you asked it. And quite frankly, coming out of the gate, it's a good way to start. Let's remember one thing. Life insurance policies are assets. They're owned by the policy owner. So they're legally recognized as personal property. And in fact, Americans, the two biggest asset classes that Americans own in this country are, one, their homes, and two, their life insurance policies. You've got over 260 million life insurance policies that are owned by people across this country. And the one thing they all have in common is that is their property. It's their asset. They own it. Now, about 30 or so years ago, during the AIDS crisis, there was a period, it may even be further back than 35 years ago now, where people began to help those suffering with AIDS liquidate a life insurance policy to help them pay for their health care needs because health insurance wouldn't cover it. And that started as a one-on-one transaction. There were generous benefactors who would go to somebody that they knew that needed money, and the exchange for money was signing over their life insurance policy death benefit. That evolved over the last 3+ decades now into a very well-regulated mainstream market that exists today. I'm sure people recognize seeing TV commercials on regular rotation on TV about not only life settlements, but reverse mortgages as well. In fact, the three biggest products, quote unquote, you'll see advertised on cable TV across any, whether it's news or sports or entertainment, is Medicare Advantage plans, reverse mortgages, and life settlements. And then, of course, the big daddy of them all, pharma. That is who is advertising and educating consumers and advisors that a life insurance policy is an asset that they can sell if they no longer need it or they no longer want it. As the popular saying goes, you could be sitting on a gold mine. So what started out over 3 decades ago as a very organically arising informal arrangement has become a well-regulated mainstream insurance transaction in this country, regulated state by state by the insurance departments, as all insurance transactions, all insurance products are, where there is literally billions of dollars a year now of life settlements that are transacted. And what's a life settlement? It's the sale of a life insurance policy by the owner to a third party, which today is an institutional investor. Big hedge funds, big investment banks are buying unneeded and unwanted life insurance policies from people on an annual basis by the billions of dollars every year now.
You're right. I'm glad we started with that because it is mainstream, and I'm glad we got that out of the way for our many viewers, because you do see it a lot on TV, and most people don't understand it. They don't understand the asset. In fact, I think it was the first time we spoke, so we're probably going back 8 weeks ago, and you had mentioned something, how so many people get to a certain point in life and either don't think they need their life insurance anymore, or maybe they had a 10-year term and they got it in their 30s, and suddenly in their 60s the premium was so high they decided to drop it, and they didn't realize, this was you talking to me, that they had a valuable asset that they didn't need to drop. They could have sold it and got X for it. Whatever that X may have been, it's more than just dropping it. And how, you didn't use the word stupid, but I'm going to use the word stupid, how stupid people can be that just take that asset and go, well, we don't need it anymore, let's give it away. You wouldn't give away your house, you wouldn't give away your car. And when we got off that Zoom call, I thought to myself, I'm one of those idiots. I did that at 65, I think 65 years old. I had a 10-year term since my 30s, and for $1 million in life insurance. And then when they renewed me at 63 or 64, I was old. I was, the age caught up to me, and the premium was just so ridiculous. I said, you know what? I'm just not going to do this anymore. I should have sold it. What a dumb decision.
Well, and bringing up the comparison to a home is a good one, because that's a good way of thinking of it. You make mortgage payments on your house for years. It's an asset you own. And then one day, if you're done living in the home, what do? Do you drop your keys in the driveway and abandon your home and walk away? Well, of course not, right? You're selling your home for its full market value, and you can do the exact same thing with a life insurance policy after years of making premium payments. If you are done with that policy, you have an option to consider of a life settlement. Now, not everybody's going to qualify for a life settlement. This is a financial option really designed for people that are 65 and above. So the 62 who knew audience is the audience that needs to start paying attention to this. If you still have a life insurance policy, you're in your mid-60s and aging, now you're starting to be somebody who could potentially look to getting the market value for your insurance policy instead of abandoning it. And once you do a life settlement and you sell off your policy, what happens is you're paid a percentage of the death benefit. So let's say you had a $100,000 life insurance policy, you're in your 70s, your 80s, 65 and above. And the other interesting thing about life settlements is that as your health becomes more impaired, the higher you're going to get in a payout for the life settlement. So remember this, life settlements are reverse underwriting. The older and the sicker you are, the more you're going to get for a life settlement. Now, that doesn't mean you have to be on, as some people say, death's doorstep. You could just have some chronic conditions. You might need long-term care services. Maybe you want to age in place, and now you need some money to help pay for home care. Well, you can look to the life insurance policy as something you could liquidate to help bring more money in, because you're paid a lump sum. A life settlement doesn't cost you anything to do. You're selling the asset that you've already paid into for years. So you're being paid out a percentage of the death benefit that you own, which you are then free and clear to use that money any way you want. And for many people, they use it to supplement their retirement income And oftentimes, as the growing costs of health and long-term care are creeping in, that becomes money they can start putting in that direction.
Well, absolutely, and that's going to lead us into a long-term care topic. But I do want to tell you, I always want to give credit where credit is due. And yes, my analogy of giving away your house was a brilliant analogy, but I did learn it from you. So I always give credit where credit was due. You used that analogy when the first time we were on the phone. I went, holy wow, that is a good analogy, and I've been using it ever since. But I do give you credit, no matter where I use it on other podcasts.
Oh, I've got to remember to trademark that one.
Let's.
Yeah, it is. It really is.
It really is. We're going to switch to, how the evolving demographic, and I stay away. We talk. I mean, our audience knows we have questions. We talk beforehand. I'm staying away from political landscapes on this show because I've learned the hard way. Two of our greatest shows, I thought we were going to get tens of thousands of views. But when we went to expand it on the different channels, we were rejected because it was too political. We had talked too much politics. We had used the word. So we're going to stay away from political landscape simply because I know this is going to be one of the episodes that's going to explode for 62 Who Knew. But the truth of the matter is, no matter what side of the aisle you're on or what, there is an impending long-term care disaster right ahead of us. I don't even know if it's right ahead of us, Chris. I think we've been in it for 15 or 20 years. It's just not as fun as a headline, or it doesn't make CNN or Fox as much as wars and other things and things that I don't want to discuss. It's not as glitzy. But I think there's been a long-term care epidemic in this country for at least the last 2 decades. And the first 6 episodes of this podcast months ago, my own friends, people and followers were saying, are you going to ever talk about anything else? Is this a long-term care insurance podcast? But no matter what guest I brought on, annuities, life settlements, certified financial planners, gray divorce, an incredible topic for America.
Yes.
Which is for our viewers, divorce for people over 50 years old, just for our viewers, it always led back to the words you used before, aging in place and the need for everyone, for the masses, to have long-term care insurance. And like life settlements, like reverse mortgages, the public thinks it's too expensive, which it's not. The public thinks that there's no payments that you have to pay. You have to write this 6-figure check like their rich uncle. You don't have to. You can pay for it over 5 years, 10 years, 15 years. And so many people think, Chris, that it's nursing home coverage. And in reality, it's anti-nursing home coverage. So I'd like you, again, because your expertise is 100 times more on this topic. I'm just emotional about it because I've lived it with my father many years ago, who didn't have long-term care insurance when I was taking care of him. Talk more about what you see of what's happening in this country as we live to our 90s and 100, and our children and grandchildren will probably live past that. We have a long-term care epidemic, don't we?
We do. We have an aging crisis in this country. We're an aging country. And here's a couple of statistics to think about and remember, and quite frankly, drop these at the cocktail party this weekend. You'll be the smartest person there. One, by 2030, every baby boomer will be 65 and above, and Gen X starts turning 65.
Wow.
So that aging crisis, and you're right, going back 2 decades, when I was working in Washington, D.C., first at the White House, then I worked on Capitol Hill for the Senate Majority Leader, and then I was a lobbyist for the health and the life insurance industries for a number of years, we were looking down the road at the aging baby boomers, and that was something coming way in the future. And you're right, that silver tsunami of aging, that's a wave that's been building for a long time, and that wave is starting to crest now. Over these next 5 years, we're looking at maybe the most critical time period in American history when it comes to aging, because again, all the baby boomers will now be 65 and above in less than 5 years now, almost just a little more than 4.5 years now coming. It is coming, that aging, and within 10 years, there'll be more people in this country 65 and above than 18 and below. And that'll be the first time in American history that our demographic would have shifted to having more aging than young people. That has an impact in the housing market, that has an impact in the labor market, and that's a big political driver. And we don't have to talk about politics, but the reality is that entitlement programs are heavily stressed. And as this population ages and they're looking for how are they going to pay for care, because nobody's plans for it. Okay, whether it's long-term care insurance or not, this is a topic nobody wants to think about, nobody wants to plan for, until all of a sudden one day you're in a crisis situation, a loved one is in the hospital and going to be discharged within 24 hours, and they look at you and say, okay, well, what do you have in place to take care of all this? And people start going, what do you mean? Doesn't this just get taken care of? Well, no. And then all of a sudden, they have to start learning one of the most complicated systems in America. The long-term care industrial complex in this country is very difficult to understand and navigate. So you have an aging population, you have entitlements under stress. Within 10 years, both Medicare and Social Security trust funds are facing insolvency. There's going to be some major changes there in tax policy and in retirement ages. There's going to be some real changes over this next 5 to 10 years. And a big part of that is going to be pushing back on the individual to take individual responsibility for how they're going to pay for their care. Today is the best day of the rest of all of our lives when it comes to Social Security, Medicare, and Medicaid. It just gets more challenging, more stressed, and will be more difficult to access and navigate as the years go on. Will they disappear? I don't think so, but they're going to look different. They're going to evolve and change, and a part of that evolution is going to be pushing back on people to take individual responsibility. So if you're younger and healthier, and you can be looking at long-term care insurance as an option you should procure and help to protect your future. But if you miss that boat and it's too late, there's still options like using life settlements, using reverse mortgages, using VA aid and attendance benefit, using annuities. There's a variety of options for people as they've aged. They're now into their 60s, their 70s, and they need care now. They have options. It isn't just either I've got a long-term care insurance policy, I've got $1 million in the bank, or I'm broke and I'm going on Medicaid. There are other options that people can still tap into. They just lack the awareness.
You've spent years building equity in your home, and now it's time to let that equity work for you. The fractional sale of your home equity lets you access the cash you need without taking on additional debt. It is a game-changing tool to help fund retirement, cover healthcare costs, or simply enhance your lifestyle. No monthly payments, no interest, just financial freedom. Turn your biggest asset into your greatest retirement ally through the power of fractional home equity. To learn more about this, go to www.62whoknew.com and check on the Chief's link. What's the biggest threat to your retirement savings? It's not the stock market. It's the cost of long-term care. Home care, assisted living, or nursing facilities can drain your life savings in just a few short years. That's why long-term care insurance isn't a luxury. It's a necessity. It protects your assets, preserves your independence, and gives your family peace of mind. Don't leave your future to chance. Plan ahead. Protect what you've worked a lifetime to build with long-term care insurance. For more information, go to www.62whoknew.com and click on the long-term care insurance link. It is a topic that people don't want to talk about till it's too late. Every expert I've had on the show, no matter what their expertise, whatever their field is, they always get back to that crisis call.
That's right.
Okay, Dad's coming home day after tomorrow. What do we do? Well, we should have had this call 3 years ago before Dad went into the hospital. And of course, you have a heart, so you're not going to say that to people. But it's amazing how people don't want to deal with this. I've had many incredible long-term care insurance people on this show and 62 Who Knew the podcast, our predecessor, 62 Who Knew the television show that was on for 2.5 years. And I had a plethora, I love that word, by the way, when I get a chance to use it, of national long-term care experts. And they all agree the number one problem is getting people to talk about this in the early stages, in their 50s when they're healthy. Well, let's talk. Well, we'll deal with that, when I need it. No, you can't deal with it when you need it. It's too late. And it's a very emotional thing for people to talk about because, you're talking about their mortality.
Well, people have this attitude of, I'm never going to go into a nursing home. My kids would never let that happen to me. They'd take me out back and shoot me before I'd ever go into a nursing home. Well, I'm here to let you know there's a big lack of kids taking their parents out back and shooting them in this country. When it comes, it has to be dealt with. And if you want to kick the can down the road, eventually it's going to come back to bite you.
Well, I was one of those families, not that would ever take dad out back and shoot them, but I was proud of the fact when I was much younger that if my parents ever needed anything, that I'd be the one taking care of them. I was looking forward to that. I'm that generation. We lost mom way too early to cancer, but when dad needed his help, in his upper 70s, he moved in with me, and we lost dad right before his 82nd birthday. I always hoped dad would make it to 90. He was a tremendous man, and we were so close from the time I can remember till he passed away. We bought a home with 2 master bedrooms, the mother-in-law's suite. But I was one of those people. I'm going to take care of my father. Now, he was a highly decorated ex-POW from World War II. He had incredible VA benefits. He had Medicare. He had a fantastic Medicare supplemental policy. And he had the best stuff available from VA as a POW. They treat, I love the VA. They have their issues, but I love the VA. And they treat, ex-POWs from any war, but especially the greatest generation from World War II like royalty. He would come in and the crowd would part. But still, I was spending back then, and I'll just name the number, about $8,000 to $9,000 a month on in-home care because I couldn't do it all myself and get my kids to school and run my mortgage company. And I've told this story several times, and I know it touches people and it touches me, and it's been 20 years. The first time Dad, quite frankly, had an accident in the middle of the night, and we had an intercom. Well, we had a baby monitor that he hated because that's what it was. It was a baby monitor from one of his grandchildren. And he went, hey, kiddo, I need some help. And I went into his master bedroom, and I helped him, and we got cleaned up. And, after everything was done, he had that look on his face. He was upset. And, he was a strong, big man. I said, what's the matter? So this is not what I want. What do you mean? I don't want you doing things like this. I don't want you cleaning my bed. I go, we've been talking about this since I'm 15 years old. I'm going to take care of you, and this is what I want to do. And you've always agreed with that. He went, yeah, but we didn't think it through. I need you to be my son, not my nurse. And I'm just going to say it, even if it gets blanked out. I don't want you to help me wipe my ass. I don't want you to pick me up in the shower when I fall. I want you to take me to Josh's, that's his grandson, karate lessons tomorrow. Or Stacy, my daughter, to her cheerleading practice tomorrow. I want to go out for Chinese food tomorrow with you. I don't want you playing nurse. Get a nurse. And I tell you, we looked at each other, and it's a weird time to hear that. But we did. And we didn't have long-term care insurance. I knew nothing about long-term care insurance 20 years ago. And fortunately, life was good, and we could afford it. But the masses can't afford it.
No.
And Dad could have ended up, God knows, doing what. It's a very emotional thing to have your father look at you and go, I need you to be my son my last couple of years of my life, not my nurse. Yes. And I think sons and daughters, they need to think about that. Even though their heart is in the right place, I'm telling you from experience, your mother or father need you to be their son and daughter during that time.
Yes.
Not necessarily their nurse.
Well, the most common form of long-term care now in this country is informal care from family and friends acting as caregivers, which creates a lot of stress on everybody involved. It pulls people away from work and making their incomes. It is a burden on the elder that's receiving the care. They're feeling like they don't want to be a burden. It pulls on them. They want to be independent. They don't want to have to rely on their adult children or whoever else is giving them that informal care. But that has become the primary form of care in this country. People do go into nursing homes, assisted living. They get home care, formal home care, either non-medical or medical. And memory care has grown significantly in this country now as one of the biggest forms of care. But guess what? Most home care is private pay. Most assisted living is private pay. Most memory care is private pay. If you're going to go into a nursing home, most nursing home care is paid for by Medicaid. Okay. And to be on Medicaid, it means you have spent down your assets and your income to below the poverty level, and now you're a ward of the state. People think, well, we'll just jump on Medicaid. Medicaid pays for everything, and we can go about our business. And then all of a sudden, they end up on Medicaid, and be careful what you wish for, because now you're on Medicaid, and you're going to be sent to a nursing home that you're told to go to, not that you pick. You're going to share a room with one or two other people. And for those that are able to plan or tap into assets and resources available to them to stay private pay, they're going to have a much better care experience for themselves, for their families, everybody.
Yeah, and I have visited people in Medicaid homes, and thank God for Medicaid for people that have no money and that are desperate. They fill a need, great people, but I wouldn't want anybody I love in one of those things.
But to be able to afford that, is a very big deal. Yeah.
Very big deal. One of the things it surprises me in the last 4 years as COVID, although there seems to be an uplift in COVID cases lately in the country, but again, in my opinion, and I don't want to get into this, I think it's mutated more into a very strong flu. We don't die from it. You get over it, blah, blah, blah. But there is an escalation of COVID. But one of the things that COVID proved to this country, especially here in Florida, where the average age of a person is 112, is that the seniors, people above 70, who were living at home and either had long-term care insurance so they could have services at home, or they could afford to pay for services at home, they're still with us right now. The people in their 70s, 80s that were in a home, in a facility, most of them are dead. They locked the doors. I'm not complaining. They thought they were doing right. They were protecting everybody. But those homes became, 10,000 square foot Petri dishes where, I had friends that had to say goodbye to their mom or dad or grandmother or grandfather through a glass window like this because they couldn't get in to see them. And I would hope, but I don't really see it. I would hope that COVID showed people that you want to age in place. Those 3 words should take the place of "in God we trust" on dollar bills. Age in place. That's where you'll live the longest.
Well, absolutely. And if you were to ask a room full of 100 people, would they prefer to be in aging in place, an assisted living community, a nursing home? If you asked 100 people, 200 hands would go up for aging in place. Everybody wants to stay at home, but hope is not a strategy. Okay? You may hope and wish and think that you want to stay at home, but what have you done about it? What have you done to plan for that? Not just financially, but also communicating with your loved ones, talking to your family, making sure they know your wishes, making sure that you've gotten the financial, the legal, and just the personal elements clearly laid out, mapped out. If you just leave that all open-ended until one day you're laying in a hospital bed and your family's got 24 hours to figure out what's going to happen next, things are not going to go the way you wanted them to go. And if you do get home and it's on the family members now to start caring for you, that's not really what you should be planning for either. So, when you look at people in a communal environment, it's like kids just went back to school this week. Already I'm seeing friends I know that kids, they've been in school for 2-3 days. They're coming home with colds. Kids have gone off to college and they're in dormitories, and all of a sudden they're getting the flu, they're getting sick. You put people in a communal environment at any age, and it is a recipe for transmitting diseases and colds and flus and any form of communicable outcome. That's much more likely than if you're at home and you're able to age in place.
Yeah, and when the older you get, the more susceptible you are. Well, let's get back also now to life settlements, because until I met you, and I consider myself fairly well expert on how to finance long-term care insurance, whether it's spreading it out over payments or using a reverse mortgage or using just a regular equity line. Doesn't have to be a reverse mortgage. There's all sorts of premium financing options out there. We have as one of our national sponsored Chiefs, which is the fractional sale of equity in your home. There's all sorts of options. I have to honestly say, until I met you a couple months ago, I never thought of using the sale of my life insurance, life settlements, to fund long-term care. How often, and I know you're one of the pioneers of that in the country, how often are you seeing that, and how can we spread that word to the 62 Who Knew audience?
Spreading the word is the key. It's information. Information is power. Access to resources gets you results. We brought the life settlement into the long-term care world, which ended up becoming the LTC life settlement 2 decades ago. And it was when I came out of Washington, D.C., I saw the need on the care provider side to find resources to help families. And I knew coming out of the insurance side that you had 260 million life insurance policies owned by people across this country that the vast majority were going to abandon at some point along the way. And here was an option to take those policies, liquidate them through a life settlement, and then use those funds to immediately start paying for care. And when you use a life settlement towards care, if you're underwritten with 2 ADLs or more, you have 2 activities of daily living or more that you are unable to do for yourself, then the proceeds from that life settlement are all tax-free. And using the funds towards care is a Medicaid qualified spend down, which means you have sold an asset at its market value and then taken that money and paid for care private pay until you've exhausted that money. And so we have seen families over the years, and we have funded millions of dollars of care this way with home care providers, with assisted living, with nursing homes, any form of care over the last 2 decades. We have funded millions of dollars of care through the use of a life settlement. And I can tell you how many times a family has come to us where they were about to throw a policy away, and instead, by settling it, they came into tens, if not hundreds of thousands of dollars, and then were able to age in place or move into an assisted living community, to be in control of where they were going to get the care, what they wanted to do, not be a ward of the state, not be on Medicaid, not be pushed into the available bed at some nursing home in their geographic region that they were approved to be moved into. That is a much different experience, but to get the care where you want it, when you want it, how you want it, that's something you have to pay for. And so you have to be cognizant of what is the value of my life insurance policy? And for that matter, what's the value of my home? Am I entitled to veterans benefits? What do I have long-term care insurance? Do I have an annuity? What do I have to work with? The use of life settlements, we've been doing that to the tune of millions of dollars of care funded over the last 2 decades.
That's incredible. So let's talk about that for a second. What factors determine whether a policy qualifies for a life settlement, and health and age? I know there are people right now listening to us going, okay, this really sounds good, and I was thinking of canceling my life insurance, and I always thought I couldn't afford long-term care insurance. So what factors determine whether a policy and or a person qualify for this?
That's a great question to sort of wrap up today's episode. I would say people need to bear in mind, if they're going to do a life settlement, one, you need to be 65 and above. Two, the policy death benefit needs to be 100,000 or greater. And then three, typically you're going to have some kind of health impairment, some kind of health conditions, because as I said earlier in the episode, the older and sicker you are, the more you're going to be paid for a life settlement. It's a very unique financial vehicle in that is the only one out there that as you're aging and your health is declining, you're going to get paid more money for your settlement. You and I, Michael, we're too young and healthy and you're too good looking to qualify for a life settlement today. But as time marches on,
Give this guy more airtime.
yes, sign him up. So the older and sicker somebody is with any kind of life insurance policy, a term life policy, a whole life policy, a universal life policy, any kind of life insurance policy qualifies with a death benefit of 100,000 and greater. Typically you're 65 and above, and you do have some health conditions. If you're perfectly healthy, you're 70 years old, you're perfectly healthy, you're running marathons, you're not going to qualify for a life settlement.
What about at 75? You know, most of my friends in their upper 60s, low 70s, you know, I would consider them healthy, but they have type 2 diabetes. You know, they have high cholesterol, of which they take medicine, so they're fine. You know, they have, blood pressure issues, but they take their medicine, so they're fine. Can that person in their 70s that, type 2 diabetes, on a certain amount of medication, but no heart attacks, no cancer, no nothing, are they eligible, or are even they too healthy, even with their diabetes and high blood pressure?
Well, you know what you call a person who's in their mid-70s with diabetes, cholesterol issues, maybe some weight issues? You call that person an American. That's a very typical profile for somebody in their mid-70s in this country. But you start to be in the ballpark for could you qualify for a life settlement? Yes. So that starts to become somebody you can look at. And it also depends not just on their health and their age, but also the policy itself. When a policy is being settled, the policy type, what it's going to cost for premiums going forward, because remember, when you sell the policy through a settlement, the financial group that bought the policy, they're taking over the premiums, they're paying the premiums. So they're going to calculate how much does this policy cost us for what we think is the next 7 years, 5 years, 8 years, 3 years, whatever the case may be. Right. And again, the shorter that time frame is going to be because you're older and you're more health impaired, the higher the payout's going to be to you. Too young and healthy, you're not going to qualify. Think of a life settlement and qualifying for it as reverse underwriting. When you're young and healthy, that's when you want to buy insurance. When you're older and your health is declining and you have a life insurance policy, now that's when you want to consider, am I going to sell this off through a life settlement and take the market value lump sum payment for this policy instead of letting it go?
Would I hate making assumptions because you know the old saying about that. There are many, many, many people, I won't attempt to guess how many, but it's got to be into the tens or hundreds of thousands, with paid up policies. They're no longer making premiums. Those policies are paid up and in force. I would think that they're worth the most to people buying life settlements, or am I wrong?
No, that's a valuable policy. So a paid up policy, a paid up policy for a person is like looking at their house. Okay, I don't owe any more mortgage payments on my house.
It's like a free and clear house.
Right, but still, at some point, I may want to sell this thing. Same with the life insurance policy. I don't have premium payments anymore, but I've gotten to a point where I have to make some economic choices. Do I want to sell this asset? And the fact that there's no premiums to pay going forward will enhance the value to the policy owner when they're settling it.
Well, I really do appreciate your time today. This, again, is going to be the first of, I hope, many appearances that you have on the show. Not just solo, but to join us maybe when we have some long-term care people on, Medicare people on. I always want an expertise like yours on, today it's you and I one-on-one, but we can have a panel show, which we've had several times in the last 5-6 months to bring all the geniuses together. And of course, you are on the www.62whoknew website. To all our viewers, just go to the insurance link, then click on the life settlements, and you will see a plethora of information and have the ability to contact the retirement genius and see what your policy is worth and if you and the policy qualify. Anything else to add to it today?
No, just that. Looking forward to when we talk again. And I love the idea of some panel discussions as well. That would be a lot of fun. But, and if people are curious and learning more about things that we're out there talking about, information, you can Google Retirement Genius. You'll see us out there quoted in the press. You'll see a lot of things out there that you'll find useful, helpful to look at. And we're looking forward. We really love this relationship with you, Michael, and 62 Who Knew. And we can't wait to keep the dialogue going.
All right. Thank you so much, Chris, for joining us.
Take care.